Grigory here, the managing broker of Vesta Preferred, and what we're going to be talking about today is if you should rent or if you should buy in Chicago in 2023. I'm going to give you my honest opinion. I know that your expectation is going to be at the end of this that Greg is going to get me to buy a house. I shouldn't be listening to this because I'm actually thinking about renting versus buying. And I'll tell you right now that I will give you a real honest opinion with really good facts on both reasoning as to why one is better than the other, and sometimes renting is actually a better option for those of you that are thinking about if they should rent or if they should buy. So listen up. I'm going to give a lot of good points, a lot of good information for you to think about, because it is something to a lot of people come to me with. A lot of people that are coming in from out of town, they're moving to the city for the first time, and they're trying to decide, where do I buy, how do I buy, what's going on here. I have a lot of renters that I've helped in the past that are thinking about potentially buying, and I have very, very specific points to consider when you're thinking about renting or buying. So I'm going to go over the benefits of both. I'm also going to go over the negatives of both, and by the end of this video you should be able to understand and determine what is better for you. So let's kind of go over the breakdown of how this video is going to go. First, I'm going to go over the current real estate market, the trends, what we're seeing, and that is always a great place to start when you're trying to make a big financial decision or move, if either renting or buying is right for you. And we're going to go over the benefits of both buying and renting, and also the costs of both buying and renting. And then ultimately, I'm going to give my future and current real estate predictions for this year, so that if you are ultimately thinking about buying, I will go over where I think it is going to be best to put your money. All right, well, let's start with the real estate markets, specifically the trends in the home prices, market time, inventory level, all of that good stuff. Over the past year, home prices in Chicago have continued to rise, but at a slower pace than in previous years. The median home price in the city is around $300,000, which is about 5.1% down comparatively to last year. This trend is expected to continue, but at a more moderate pace. One of the things to consider is that that is a general Chicago stat. So when you're thinking about specific areas, it's really important to know and understand which specific area you're thinking about and knowing how those trends are looking. So use a generalized number to have an understanding of a generalized area, but then when you're going into a specific area like Lincoln Park, South Loop, West Loop, you have to know ultimately how those trends look like and what you can expect. Next, let's talk about inventory levels. So inventory in Chicago, it's been tight in the recent months. It's been tight for the last few years. That's been the big conversation for the last few years. Inventories actually is what held up the real estate market and why we haven't seen a crash, and then a crash is not going to be coming. Everything in economics is supply versus demand, right? And there just has been too much demand comparatively to the supply that's been on the market. Now, last year we saw a pretty big jump in interest rates, which we're going to go over in a little bit, but that interest rate jump, it did kick out a lot of buyers and got them to not buy, but still it wasn't enough to outweigh or outpace the amount of supply that is in the market. So the supply still was very tight comparatively to the demand. So this year, what I'm seeing, the turnaround, right, where everyone's like, well, the downturn is coming, what I'm seeing right now is that downturn really is that buyers are not going crazy like they used to over the last few years. They're not overpaying by $100,000, $200,000 in pricing. They're taking a look, making sure the product is good, and then they're paying the fair market value. Now, I have lost out on a few multiple offers already this year, but those multiple offers are very different from where they were at in the last few years, meaning I've actually had some multiple offers where I've won below the asking price of a home. That just was unheard of before, and it is now, in my opinion, instead of a 15 to 20% appreciating market, it's going to be somewhere between a 1 to 3% appreciating market. It's going to be a healthy market this year, but don't expect it in Chicago area to drop by 20-30%. That's just not going to happen. Finally, interest rates. The Mortgage Bankers Association is forecasting that interest rates will likely decrease to the mid-5s by the end of 2023, with a potential further drop into the 4s once buy downs expire. So what I'm also seeing is that inflation. So inflation is the number one determinant factor when it comes to the way that interest rates are, right? So interest rates are a way to it's the expense of borrowing money. So when inflation is starting to go up, that means that things are getting more and more and more expensive. So one of the ways that the Fed has started to handle this in the last year is they focused in on the housing market. They said that it was too cheap to borrow money to buy homes. So they started to increase those rates so that people would slow down on their spending, which would help inflation go down. Now, I am a big advocate that the home buying public is the most important, or one of the most important buying sectors in the US economy. And to be focusing on that segment as the place to hit negatively financially, to slow down the economy is, I'm a broker, I'm a realtor, so I'm always going to fight for home ownership and the home ownership rights. But apparently that's where, and ultimately they want to focus in on, they keep hammering on. And they've noted, Jerome Powell noted the housing market specifically as a place that he is trying to attack to slow down inflation. Now, good news is that inflation is going down. It's trending downwards. And I'm already seeing interest rates starting to level off and go down. It's still super up and down, but it's not getting to the 7 and 8s that everybody was so spooked about. It's right now, it is end of February. And interest rates, the last time I checked, are in the low 6s. I actually heard last week that they were in the high 5s. So you're already starting to see the trend going downwards, and interest rates are going to continue to go down as inflation goes down as well. Now, because interest rates are still higher than they were for the last few years, right? Like it's still a 5 to 6% interest rate. It's still 2 to 3 times higher than your 2 to 3% interest rates, right? So it's still a tough pill to swallow. So buyers, they still want to try to get their interest rates down to relive the good old days. So one of the things that we've been doing is we have been going to sellers and we've been asking for 2-to-1 buy downs, which is just a way for the seller to give you a credit up front so that your interest rate goes down. There's something called an adjustable rate mortgage where it adjusts over either a 3 to 5 or more 7-year period. And those typically is where you can get a lower rate, but then it says it's going to jump up to whatever amount in 5 years. But then the idea is that in 5 years, it's going to be a lower interest rate. So you refi before that happens. And that is a good strategy to have when it comes to buying a home and how to lower your interest rate right now. So these tactics aren't free. They do cost money, right? So either the buyer is going to be paying for them or the seller. My prediction is that sellers are going to start having to pay more and more of those, especially if they're not updating their home and making it perfect, because buyers want the perfect home. They don't want to do any work. If you're considering renting, there are actually a lot of advantages that renting does offer. So first and foremost is it gives you the ability to get into an area of Chicago that might be more expensive to buy than it is to rent when you're looking at the cost perspective, and we'll get into that in a little bit. So renting actually allows you to move into a rental high-rise that might be in a really nice downtown location. It gives you accessibility. It gives you a lot of really nice amenities. These rental buildings have amazing amenities that many condo buildings don't have. A lot of condo owners like to have a better home, right? So the focus on condo-specific high-rises and just condos in general is focus on the home itself. That's what you're buying. With rentals, the home is nice, right? For sure, there's definitely nice homes and nice units and nice apartments, but the community element of it is a much bigger investment. So these rental buildings have amazing amenities, great gyms, great pools in a lot of places, a lot of different amenities. There's dog washing stations that I've seen. I mean, there's just a lot of things like pickleball. There's also the other thing you need to consider, which is expense of maintenance costs, right? So as a renter, what you're paying is the rent, and then the management company or the landlord, they're the ones that are responsible to make sure that the place is operating just fine, that all the appliances are working well. If not, then that expense goes on them. So your maintenance and cost of expectation of those expenses is pretty much set in the rental realm, where if you're owning a home, those are going to be on you. Also, it gives you flexibility, right? So the usual rental contracts are about 12 months, so you don't have to be fully invested in this place. You could just be like, well, listen, it's only going to be a year. How bad can that be? When you're buying, you should have a much longer mindset when it comes to owning the place. So that's what's really nice about renting. It gives you that flexibility, it gives you those amenities, it gives you the lesser expectation for your kind of month-to-month, day-to-day costs and the maintenance of the home. Lastly, I do want to give you an idea that most rental high rises are built in and around the downtown area or in the most desirable areas of certain neighborhoods, right? So one of the biggest things is that these high-rise rentals are built close to public transportation, because a lot of people that are renting are obviously working and they need to get downtown quickly. So a lot of these rental buildings are very close to, in many cases, just down the street from a train station, really good bus lines. So all of those things are very, very big benefits. And Chicago, just, renting in Chicago, it's one of the most vibrant rental markets out there. The buildings are always competing with each other. The amenities, I keep mentioning it, but it was just so eye-opening to me when I came to do real estate in and around the Chicago area for the first time in 2008. And it was the trend of these massive rental buildings with these crazy amenities was just popping off. And I was blown away. I mean, at that time, there was a building, I remember Grand Plaza, that had 50,000 square feet of amenities, and that was just like a mind-blowing thing. It was even a running track on the rooftop. There was an indoor basketball court. It was the beginning of all amenity buildings. And now, when you look back at it, that's like your standard amenity offering. But Chicago is always leveling up on its rental game. The rental buildings are gorgeous. There's the Omni buildings that are just insane. There's $25,000 a month rentals now. So there's definitely a big trend for rentals, especially as we become more transient and our culture starts to become more movable and we're becoming we're more nomadic almost is the way that I'm seeing a lot of rentals, and why a lot of renters like that is because we're working from home a lot more and we just don't like to commit, right? I mean, people just don't like committing right now. And if you're a non-committal person, rentals just gives you that ability to be able to come in for a year, live in a really nice place in the best part of the city, and head out. Now, benefits of owning a home. So there's, of course, a lot of benefits of owning a home, and I'm a big advocate for that. So one of the biggest things, right, when you're looking at rentals versus buying, renting isn't cheap, and money that you're spending on rent every single month, it essentially goes down the drain. So it flies out the window. When you're buying a home, you're building equity. So think of it like this. If you're getting a loan on a house, actually, the bank is buying the house, right? And you're borrowing that money from the bank. So your bank is essentially your landlord. Now, your monthly rent payment, right, that you would think of renting, but you're actually paying to the bank, which is your mortgage, it actually breaks down with a piece of that going to your principal, which is what you actually own. So every single month, a piece of your mortgage payment goes towards your equity. So you're building this equity over a long period of time. And when you're renting, none of that kind of shows up. So you have this ability to start building this asset, this wealth, and you're building this valuable asset. And one of the other things to consider is the whole purpose and the whole idea of owning and buying a home is you want to see value growth as well, right? So there's numerous ways that you're going to be getting your value and your investment in this property back. And that other way is just going to be overall appreciation. So whenever I look with buyers, I always think of it as, is this going to be a good investment for you? So I look at the trends of the area. I'm looking to see if the area is showing strong growth. The way that we buy, I always say you make your money when you buy, not when you sell. So you have to buy right. So that's a big term that I use because I want to make sure that the baseline of what you buy a home for has a lot of opportunity for upward momentum when it comes to value. So you have the mortgage piece, your building principal, you have your value piece when it comes to the appreciation. You're hoping for 2 to 3%, but as a story, my first house that I bought in 2015, and in 3 years I saw 33% appreciation. That changed my financial future, and real estate can do that for you. Now, I'm not promising that that can be redone or whatnot, but fortunes are made in real estate every single day. So it is, I'm a living example of that. I don't just sell, I actually practice that. So I'm a huge advocate that if you want to change your financial future, a huge way to do that is through real estate. One of the biggest factors to consider is length of stay. And my question I always ask is, how long are you going to be living in this particular location? So if somebody tells me 3 years, that typically is my jump off point of where it makes more sense to buy than where it is to rent. The reason for that is that you should expect about 2 to 3% appreciation on an annual basis for any home that you buy. And home buying costs are roughly between 2 to 3%, and home selling costs are roughly about 7 to 8%. So you're talking about, let's call it 9 to 10% of total cost when it comes to transacting real estate. So over 3 years, if you're assuming a 3% or so appreciation, that's about where that break-even point is. Ultimately, best case scenario would be 4 to 5 years, but at 3 years is where you're breaking even. And if you break even and you don't make any money when you sell, but you're not losing any money, that means that you saved all of those years worth of rental payments, right? So you are actually well ahead. The last part to consider are the tax benefits. There's a lot of tax benefits when it comes to owning a home, and you can write off income and whatnot. So there's 3 different avenues of being able to acquire and build wealth through real estate. That's why I'm a huge advocate of that in particular. The last thing that I want to go over is the stability that home ownership offers, right? So home ownership offers a lot of stability when it comes to owning your place, right? Landlords all the time, they go ahead and they get up and they say, I don't want to be a landlord anymore. I want to sell this home. I actually have a few landlords right now that we had to give the bad news to the renters. Now, obviously your lease will extend through the actual lease terms, but a lot of renters like to stay, they want to renew, and at the end of the lease term, it's not 100% guaranteed that you're gonna be able to renew, because if the landlord wants to sell, they can, it's their right, and you're just renting, right? So you don't have that ability to say, I wanna stay, but when you own a home, it's yours. And outside of some government entity coming in and saying eminent domain, which is so rare, that you're basically there for as long as you wish to be there. So the stability that it offers when you're owning a home is very, very good. And when the rental market is going up, and the rates are going up, and the rents are going crazy, which we've seen over the last few years, your mortgage is guaranteed over the terms of those of the year, right? So if it's a 30-year term, it's not going to change for 30 years. If you have an ARM for 5 years, well, then you have 5 years to figure out the next step, but you still have the ability to shop and figure out what ultimately are the best terms for you. One of the most important factors to consider, which we are going over before, but now we're going to dive into, are the costs associated of renting versus buying. Where renting can give you a lot of flexibility, reduce maintenance costs, home ownership can give you a great investment in your future and can build you a lot of value monetarily and also in the asset. So let's take a look at the costs associated with each option. When you're renting a home, you're going to be typically paying a monthly rent that includes utilities like water and trash removal. When you buy a home, your monthly mortgage payment includes principal and interest, as well as property taxes and the homeowner's insurance. And if you are in a homeowners association, it might also include those dues as well. With renting, you don't have to worry about those maintenance and repair costs, as those are typically covered by the landlord. On the other hand, when you do own a home, of course, those costs are on you. If the furnace kicks out and you need to buy a new one, that is a cost that is going to come onto you. And unfortunately, those are the negatives of owning a home, but also you own those assets and you can invest in higher efficiency machines. You can add a Tesla charger to your garage and increase the value of your home. You can build out a deck and increase the value of your home, right? So it's not that investing in your house is typically a negative, right? You can make it into your own, you can make the kitchen whatever you want it to be. And if you do it right, and I coach my clients on this all the time, it's going to pay you back, if not what you paid, more than what you actually put in. So let me give you an example. Let's say you want to rent a great 1-bedroom in the city. You can assume somewhere around $2,500 a month for rent. If you have a car, monthly cost for parking is about $250 on average. So let's say your rental value for a good 1-bedroom rental in the city is around $2,750. If you look at this in a mortgage cost perspective, then you have to go backwards to figure out what's going to get me to a $2,750 a month mortgage payment. If you're looking at owning, then the power that you're looking at in regards to buying power is about $300,000 in value for a 1-bedroom to be about that amount for a monthly mortgage. You can certainly find a 1-bedroom condo in the city with parking included in this price point. I actually just had a River North condo that I sold for less than that, but the comparative quality and style and offering is going to be different, right? So that is something that you have to consider, is that when you're looking to buy, you might not be in the most desirable location if you want to stay at that same price point. But if you want to be downtown, you can spend more, and then you have to look at all of those costs associated with it, and as well as the value, to decide ultimately what is a pound for pound comparison, to decide to make sure that it actually makes sense for you. Chicago, I've always talked about this, offers a very unique perspective for home buyers because it is one of the most livable and one of the most affordable big cities in America. Chicago is number 3 largest city in the US, but it doesn't operate like your typical mega urban center, right? You have the coasts where LA, Miami, New York are just these extremely expensive cities. And every single time I have somebody that comes through from those cities, they are blown away by what they can afford here in Chicago. And Chicago keeps winning on one of the best places to live. It's got a lot of benefits when it comes to the cultural aspects. What do people get out of this city? What are the positives of the events? The food. Get out of here with the food, man. Like, no one can compete with our food. Pizza, the pasta, every single region of the world is represented here in the Chicago area. We have 77 different unique neighborhoods, and each neighborhood has its own flavor, its own design, its own style, with its own amazing food. So the city offers so much in regards to the livability, but it doesn't reflect that in regards to how what the costs are of owning. Renting actually is pretty comparable when it comes to owning a house in the city. So usually it's a lot less expensive to rent than it is to own. In Chicago, it's actually pretty comparable when you're looking at all things considered. So Chicago offers this incredibly unique perspective for homeowners that they can actually afford a really nice property in an amazing growing city that I keep saying is this understated, undervalued asset. So Chicago, in my opinion, one of the biggest benefits of buying here in the city is that it's just a long-term play, that as long as you stay in this for a while, you're going to see a nice appreciative gain as long as you buy right, and you have to make sure that you're looking all of those numbers from the beginning in the right way. Let's go over some current real estate market trends. Is if you're looking to buy and you want to kind of see where ultimately is the best place to buy. I actually did a Q4 report for 2022. So if you're looking at this in the beginning of 2023, so that go take a look at that. I go over some good areas to buy in the certain categories of condos, single family homes, even multi-units in and around the city and the suburbs. So that's a really good one for you to check out. Chicago is always a growing market. The different neighborhoods, 77 different neighborhoods that each have its own growth patterns, its own data. There's certain areas like Logan Square, Avondale that are growing and have been growing very quickly, but there's a lot of outskirt areas that are still understated, but I'm seeing a lot of potential and positive momentum going forward as people get priced out of these other locations. They keep growing in the positive way. So you have to take a look and see what ultimately you want to buy, where you want to own, how you like the neighborhoods, but there's a lot of opportunity for upward momentum when it comes to the value that you can see in owning a house. We're also seeing a rise in the popularity of multifamily properties such as duplexes and triplexes, which offer a unique blend of investment potential and flexibility. Chicago has really strong rents, but very moderate in buying ability for these multi-units. So a lot of investors are coming to Chicago because it is very, very affordable to buy a multi-unit comparatively to the rent that you can get and the caps that you can get from that. And then another trend to watch is the impact of technology on real estate, with the rise of virtual showings and online transactions, making it easier than ever to buy or rent a home from anywhere in the world. Technology is always on the forefront of real estate, and it is a place that always takes up the technology first. I mean, you have some of the biggest tech players in the world competing in real estate. You have Zillow, you have Redfin, you have a lot of AI things that are coming out right now. So you got to monitor that. You can use, and it gives you a lot of resources as a buyer to have the information that you didn't even have 10 to 15 years ago to now make educated decisions. So while no one can predict the certainty that there are of what's going on and what's going to happen in 2023, but according to Chicago, it's going to be one of the most stable markets in 2023 in the US to invest. Why is that? Well, in the last few years where interest rates were low and people were going through the crazy buying phases, these coasts in San Francisco, you even had in Austin, Texas, you had a lot in Miami, you had these prices going crazy. People were spending $200,000 to $300,000 over asking, dropping their inspections and all that stuff, nuts, crazy things. Chicago didn't really get that. Yes, we absolutely saw a big upward momentum when it comes to the value, but we didn't see those massive jumps that just didn't make any sense. So because of that, we're not gonna see a big downward pullback from that. So Chicago is predicted to be one of the most secure housing areas in the US because of that stability that Chicago always shows. So continued job growth in the city, particularly in sectors like tech and healthcare, could drive demand for housing and lead to pricing increases in the coming years. Chicago keeps growing, and a lot of people are finding out that this city is one to move into. We're also seeing a lot of new projects, new developments in the works, such as the massive Lincoln Yards projects in the city's north side, which is expected to bring thousands of new housing units to the market. And experts are actually predicting that Chicago rents could start normalizing this year to increase 2 to 4%, which is what Cranes is reporting. Now, of course, all of these projections could change. The real estate market is very much kind of its own animal when it comes to the way that it makes moves, but the indicators are showing that Chicago keeps being one of the best places to put your money into if you're looking to buy in 2023. So buying and selling a home can be an overwhelming process, right? So it is so important that you work with a good professional that knows what they're doing and also is specializing in the areas you're looking to buy, so you can get ahead of those trends and use that to make sure that you buy right. I always say that we're not a free service by any means, right? We're not charity workers, but we have a very specific price associated to our value. And a majority of us don't provide that value. I'm gonna be the first one to say that. But there are a select few brokers that if you find them, they can give you that value, if not more back. I always tell my clients that if you're not seeing what I'm worth in this transaction, then I'm not doing my job. My job is to negotiate aggressively for my buyers and get the best price for my sellers. That is what I do. I consult on that regard, and my job is to keep my ear to the ground and get the best value for my clients. And that is what a professional broker should be doing for you. With access to private market information, an agent can help you find off-market properties or get a head start on newly listed homes that may not be available to the public. If you want to get free public access, look at my bio, look at my description. Somewhere on this video, there's going to be a link to something called Zenlist. Zenlist is the future of real estate in regards to searching. I see a lot of people getting inundated and getting just overwhelmed on these big online search databases that if you click the wrong button, 55 different brokers call you all at once and you hate that experience. Zenlist is the opposite of that. They give you a private, curated experience, a one-on-one that is invite only. I have to pay for the subscription for my clients, but they all love it. The search functionality is absolute first class, better than anything that I've ever used, and also it gives you off-market capabilities. So if you're interested in that, please find that Zenlist link, request access, I'll give it to you right away. So ultimately the decision to rent or buy in Chicago is going to come down to your personal circumstances, right? Is it timeline based? Is it going to be cost based? Is it a specific location you want to live in? And also when it comes to the amount of money, cash on hand, right? So you got to remember there's down payments involved with owning a home. It's not cheap to buy a house, but the upfront investment is going to be worth it when it comes to the amount of value you can see over a long period of time. Make sure to be working with a real estate agent regardless if you're looking to buy or to rent. They can guide you in the right way to make sure that you make the right decision ultimately with what's best for you. And also a little side pro tip, make sure that you know how much that agent actually is doing on an annual basis, because you don't want your deal to be the reason they can or cannot pay their rent or pay their bills, and that will be a very bad place for the right consultation to come your way. So make sure that you know what and how that broker operates and at what levels that they do. And remember to check out that rent versus buying calculator on my Zenlist link. It can kind of give you the overall valuation of what it looks like when you're looking to buy or to rent, and which one makes better sense. So if you prioritize flexibility, not having to worry about maintenance costs and ability to live in a desirable neighborhood at a lower cost, then renting may be a better option for you. On the other hand, if you prioritize stability, building equity, and the ability to customize and make changes to your home, then buying may be the way for you to go. Use a real estate agent. It's a good idea. I'm obviously self-promotional here. This is my channel and I'm a real estate agent, but I also run the #1 team in the city of Chicago. I raise the best style of real estate brokers for a reason. We've been doing this for 15 plus years. I've seen a lot of bad actors out there, and everything that we do is always focused on making sure that we're doing the best for our clients and that we're consulting them, and we're not looking at the amount of money that we're actually making and the amount of money that we're actually making for our clients. That is the best way that we look at it. You want to make sure that the way that the broker operates is via relationship based, not transactional based. And I always tell my clients that my whole point is I want to get referrals from you, and I want you to give me this listing when it's time to sell. And if I'm not making you money when you're selling, and also you're not giving me referrals, then there's something wrong with our relationship. And that's the only way I, as a unique boutique broker, grow. I don't have a big brand behind me. I am Vesta. And the way that we've grown to #1 is through those powerful referrals and relationships. And the only way that happens is if I do a great job. Whether you are looking to rent or buy, it's important to consider all the factors discussed in this video. If you have any questions, please let me know. Drop a comment on my profile on this video. Subscribe here, send me a message. There's anything that I can ever do, please. I hope that this was helpful. Any questions I can answer, please send them my way. We are here to help you, and I'm excited to help you on this journey of either helping you to rent or to buy in the city of Chicago. Grigory Vesta Preferred. Thank you for watching.